TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 26th. Is it the 26th? Yeah, June 26th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, no problem. Let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Turnaround Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 99 points. 24,352 is the print. S&P up 13, 27.29. NASDAQ 100 up 0.8% or 59, nearly 60 points. Russell's up 13. That's 0.8% to the upside. Semis up 7.5. Trannies are back 31 bucks. You got the spot volatility index. Perhaps the most important of all of the things that I will share with you today, it will be in analyzing the spot volatility index. Now, for those of you that were certainly listening to the show yesterday and you saw that the Dow was down 400, 500, 600 points, we talked about, and I kept you from trying to jump in on that short train, but we had somebody who was trading the TVIX, and I said, sell now would be a good time based upon the patterns associated with that spot volatility index in relationship to its forward-looking futures contracts out there. That turned out to be excellent advice. And so I'm going to give you some excellent pieces of information so that you'll know exactly what the market is communicating to you come 4 p.m. Because when we take a look at the spot volatility, quite frankly, it is an end-of-the-day reading when you and I take a look at those one-day rates of change. So ring the bell again because it assists, because I know how many people were thinking, oh, man, this market is going to get crushed. And maybe it is. It's just not the following day when you have that one-day rate of change greater than 10%. So we'll take a look at that. Gold is off $7. Silver's down a nickel. Light sweet crude up about $2. Leading the charge the upside, it's Amazon up $34. Netflix up 19. Mercado Libre, just like saying that name, but it's still up 5.5% or $15 and change. ABIO Med, not sure how you pronounce it. A Biomed. Anyways, it's up $12 or 3%. Equinix up $12. Intuitive Surgical up about 11. Puma Biotech up 10. To the downside, it is Lending Tree, TREE, down $18, 7.5%. FactSet Research off $8. AutoZone down 7. You got that what is it? Beijing, I think it is, Limited. I think we did that the last week or the week before. That's off $5. BlackRock down 5. So there's plenty to look at. Of course, I want to look at what you want to look at. So let's go right to it. Let's go right to it right now. Let's go take a look at spot volatility index. So yesterday, the actual move on it, if you look at the bottom panel of my screen, if you actually look in the box, I'll just hover on yesterday. You'll see the one-day rate of change was bottom bottom panel of the data box, 25.85%. What does Stevie do? We put a blue arrow there. Kind of getting tired of all these blue and green arrows, but we have to put them there. Get a blue arrow. What typically takes place the next day? It's called bounce or bottom. You don't know which one it's going to be. You can take a look at a bunch of other tools out there to try to help identify. Primarily, you're looking for patterns. What kind of pattern are you looking for, Steve-O? Well, the type of pattern you're looking for is, the type that creates solid bottoms and solid tops out here. And that's what you have going on right now inside the Dow Equity Futures contract. Now, the key is going to be, because this is a 5-hour chart, the current bar session does not complete until 2 p.m. So 111 sort of doesn't really make it. Although at 111, you can see price traded above Stevie's red line. 24,292 says price is headed up to the 24,500 level. Your 24,350. That's another 150 points to the upside. Is that doable? Of course it's doable. In fact, it's more than doable. In fact, it's very likely price would take that out based on some other scenarios. What are those other scenarios? Well, let's come back to the spot volatility index, because this is the beauty of not calling something the fear gauge and instead trying to identify the patterns associated with it that give you a high probability of success as to what the markets are going to do. Today, as we speak right now, and at 1:12 in the afternoon, it sort of doesn't matter, but it does matter because we can take a look at, well, geez, if this was the end of the day and the spot volatility index closed down below minus 10%, less than a minus 10% out there, or that means minus 10% or lower. I'll say it 3 different ways, and eventually somebody will say, yeah, that's exactly how you were supposed to say it. Right now, you're trading at minus 11.71. Does that make a difference? Well, in Stevie's book, if this were the end of the day, we would go ahead and do what? We would put a green arrow up there. So let's just go ahead and put a green arrow. And you would say, well, who cares? If you put a green arrow, so what? Just by putting a green arrow there doesn't mean anything, does it, Steve-O? Well, then I would say to you, well, why don't we go find out? When we take a look at some of those prior occurrences where you had a out of control, out of whack spot volatility index that closed up by greater than 10% on one day, such as May 29th, and then on the next day, May 30th, your reading was, in this case here, minus 12.22%, an initiation move. What did the market do? Well, in the case of the S&P 500, continued on to higher highs up until June 14th. For many days thereafter. Now, you might look at me and say, yeah, but Steve-O, look at the spot volatility index at that stage of the game. It was below your 50-day exponential moving average. And I would say, you have got amazing eyes out there. What happens if we get that same back-to-back reading when the spot volatility index is above the 50-day, such as back on March 1st, and then the next day, March 2nd, which was a minus 12.82% reading? Did the market care? Or did the S&P 500 move higher? Most important element for you to watch today is what is the closing rate of change on the spot volatility index. Something less than minus 10%, the market will continue to move higher. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to our first question. Comes in from JJ. James wants to know, he said, where would you look for an entry into NVIDIA? Thanks. So let's take a look at NVIDIA. And what we want to do here is we want to take a look at the sector as well, the semiconductors out there, and try to piece these two things together. So if we take a look at NVIDIA and its drop yesterday, we're looking at a daily time frame chart out here. The first thing that we're going to notice, let's use a yellow line out here just to add some nice coloring. So what we know about NVIDIA is it came right back to a level where it broke out. Now, what we're using as the breakout, James, is the gap to the upside on the trading day of May 7th. 17 million shares were traded there. As NVIDIA pulled back into the gap, it did it with 16.6 million shares. Basically about the same volume. Your preference would have been to see price pull back into that gap on later volume. Nonetheless, gaps, which are your friends, breakouts or breakdowns, in this case here, a breakout, that may have been the buy area. May have been. Today you've got an inside day, so you don't know. There is an A to B equals CD to the downside here inside of NVIDIA. That would set up a Gartley buy. The A point out here, James, would be the high of June 14th. The B point is June 19th. The C point looks like the very next day on June 20th. So you're going to see this made a 1 to 2, A to B equals CD out there on NVIDIA. And if you were the owner of the Art of Timing the Trade, well, you would know when you do a 1 to 2, A to B equals CD, you're going to do something different. Now, that difference just could be a stalling in this case here by moving to the just by continuing to move sideways. Here's what I'm going to suggest you do, because when you do have a what we'll call a buy the D point, what you want to see is some type of bullish reversal candle. You don't have that just yet. And what you're looking for today, ideally, is you just have this little doji. It would be very easy then to have some type of bullish reversal candle tomorrow. And then you would have your signal. Likewise, maybe what you're going to do, or NVIDIA is going to do, is continue to test this 239.06 area. You'd like to see that occur on lighter volume. But remember, we want to take a look at what's going on inside the semiconductor index as well. Now, the retracement here inside of NVIDIA, if we just simply go from the low of April 25th to the high out here on the trading day of June 14th, what you're going to see, it did less than a 0.618 retracement, very close to it, 232.80. This thing actually got down to a low of 235.54, so certainly qualifies in my book as a 0.618 retracement. Price came back to where it should have yesterday, just slightly too much volume. Now, on a weekly time frame, brand new weekly profile has formed. And inside of NVIDIA, still is in bullish mode when we take a look at the weekly time frame chart. I know you're going to say, how can you say that, Steve-O? Well, I just did. The reason that I can say that with conviction is because the brand new profile formed above the prior profile. We take a look at the weekly charts out here. It's also a bullish structured profile. The low of that profile box is 236.30. The low again yesterday, 235.54. Well, that's a beautiful thing. Closed above it out here. Now, it's just a weekly time frame chart. The week is not over. If you were to see a close below 236.30, we haven't seen a close in NVIDIA below the bottom of a weekly profile, and you like to get at least two closes in a row below the bottom, that would have to take you back into March of 2017. So the lows of these boxes are very important out here. But here you can see NVIDIA had come back to another place of support on its weekly time frame. Monthly is not going to provide you or I with much information. The weekly says you've come back to support. The daily says you came back to a level of support, a breakout area, but with a bit too much volume. And this may be a Gartley buy, so you want to see some type of bullish reversal signal. The other thing that you absolutely want to see is you want to see the sector give you a signal as well. So now, as we take a look at the semiconductor index, you're going to see the same bullish, potentially bullish pattern. Here is the A to B equals CD to the downside. It'll look different. The high is June 7th. The low I would be using out here is June 19th. The next high, or the C point, would be the trading day of June 21st. Makes a 1 to 1.272 A to B equals CD pattern. Today is not a bullish reversal candle. Green, yes. Bullish reversal candle, no, not yet. We have to see how the day ends. Could turn into a hammer. That probably not. The bottom wick here is just is not twice the size of the body of this candle out here. So this would say to me, James, you're probably at least a few days away from this giving you any kind of a signal out here. But your preference is to get the sector correct. Get the stock like NVIDIA correct. So I think you're close. And it may be here. I would just rather you get the confirmation as well. And it would be nice for you to get that confirmation by taking a look at that spot volatility index, 1-day rate of change, seeing a close of something at minus 10% or less than that. Just simply by taking a look at that first chart that you and I did that shows what typically happens inside the market, at least the S&P 500, when you get those back-to-back days. Doesn't happen very often, but when it does happen, it gives you a high probability message as to what the market wants to do next. So yes, this is like Stevie riding through the streets of TFNN saying, be careful if you're short. Come 4 o'clock, if that spot volatility index is minus 10% or less out there. What else would you want to be looking for? You know, the NASDAQ or the NQ certainly got beat up to a pulp yesterday. So we should go take a look at all of the, that's actually the intraday set of the 30-minute charts here to take a look at what's going on inside the NQ as it relates to the global flow of cash. What's going on as it relates to the euro? Heading up to resistance right now. Where is it with regard to the yen? Heading up to resistance. Where is it inside the pound? That's the very right-hand side of my screen. Heading up towards resistance. Hasn't broken through, but these are going to be important levels to watch, those red lines. I'm not talking about, revving up your engine, although this would be revving up the engine. This is not where I had intended to go, but we just fell there. So, if you believe that life happens for you, which I think that it does. I know that it does. Well, I guess that's the reason that we landed on that spot. What I was really trying to do was to get over here and take a look at our multi-time frame profiles, 30, 120, 300, daily and weekly. Now, what was interesting here about yesterday was how the weekly came right down to support the top of its box. Didn't actually get all the way down there. There was 69.67. So from an intermediate term standpoint, inside the NQ was saying, close, but no cigar out there. The daily, the daily could have been an overreaction. Last Thursday set up a nice big old bearish engulfing candle, gave you a nice little sell signal out here inside the NQ. Right now we've got a bounce that's going on. Will it last through 4 o'clock? I don't know. If it does, what you should anticipate is that the NQ will make a run for the 71.97 level. That's another 70 points higher out there. You'll see on the 5-hour chart that is dead square. That is like taking a dart and hitting that little red spot out there, dead center. That would get you up to the top of its TAS market profile for the 5-hour time frame. Now, the reality is it won't get to 71.97, probably not today. But 71.68 is the bottom of the daily profile. And if you get a close above 71.68, and you're still short, you've got to ask yourself this question. Why? You just got back inside the range. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, email coming in from Chris F. Chris says, Steve-O, beautiful day in Montana. I'll bet it is. I used to have a production facility, a manufacturing plant in Big Sky, Montana, in the Bozeman area. And yeah, Montana is a beautiful state. In any event, let's not get too caught up into Montana. But the question is, what are your thoughts on the euro? And what are your thoughts on crude? So let's take a look at light sweet crude, which has had a big bounce here over the past couple of hours. And Chris, what we're looking at here is a 60, 240 daily and weekly set of time frames for Stevie's synthetic contract for light sweet crude. Kind of like your synthetic oil. It's a better grade of oil, if you're going to protect your engine. Well, I think the synthetic contract here for light sweet crude provides you and I with the better market profile system. And what we can see from a weekly standpoint is that sellers are lined up basically right here. If we just looked at the 60, the 240, and the daily, we wouldn't know that. But if we looked at the weekly, and we looked at Stevie's synthetic contract that shows the TAS market profile top and center of the box, you'll see the top is at 70.48. We're trading at 70.33 right now. The center of that box is 69.37. Bottom is 66.05. Clearly a bearish structured box out here. This is the first time that light sweet crude is up testing these levels, Chris. This is where the sellers should be. If you were to see light sweet crude on a weekly basis, it's a weekly profile, close above 70.48, tells you that you are in total full-out bullish mode. Not only would you go back to the highs, the recent highs, that's not much higher, that's 72.69, but you could actually take that out and form an A to B equals CD to the upside. But as we speak at 1:32 in the afternoon, if you were asking me where are the snipers hanging out when it comes to light sweet crude, it is right here, right now, right at that price point. The top of that box is $70.48, 46, somewhere right around there. So if you're thinking of going long now, I would say don't do it. No way. You wait for it to overrun those sellers. Let it be, let them get steamrolled. But right now, it may be the sellers in light sweet crude that have the upper hand. I know it's hard to believe, but this is just the simple set of tools that you and I have to rely on, and they're more than just simple. So I would just be patient. If you were long light sweet crude, I'm not saying to exit your position. I don't know where you would have gotten in, but I would, if I were your pilot, I guarantee you, the fasten seatbelt sign is on, and we would be saying we're about to fly into some turbulence out there. You can get through that turbulence, but it can be a rocky ride during the time period that you are in that storm. So those are my thoughts on light sweet crude as we take a look at it 1:33 in the afternoon on June the 26th. Now, with regard to the euro, what we'll do is we'll just simply come over here and take a look at Stevie's his Ninja Trader tools and charts out here. And what do I think about the euro? My favorite answer there is not much. Now, I don't know what you're doing, how you're trading this or what have you, but the euro's got some pretty steep resistance, which would be the high of that June 14th level, right around the 118-ish area. And it's trading just simply inside a range. You can clearly see the range, home on the range. Speaking of being from Montana, and I don't know where that came from. But if you take a look at this and we just draw a rectangular box, it's very clear that the euro right now is just stuck inside this range. So it's the 118-ish area down to the 115-ish area. And right now you're right in the center. So you don't know which way to go, which way is up, so to speak, and which way is down. You're really right in the center. So the reward risk on trying to take a trade inside the euro right now, it's not good. You want to sell the top of the consolidation. You want to buy the bottom of the consolidation. You want to stay away from the middle of the consolidation. And you're at 116 and change. You're kind of really right there. It's just a consolidating pattern at this stage. Now, the beauty here, Chris, is that because this is a consolidation, because it's a clear consolidation, is you can take that consolidation range, and a break to the upside or the downside is the very likely target, price target, your measured move of a break of this consolidation area. That's what I think when I take a look at the euro and I look at it on a daily basis. Now, I don't know what will happen if we change this thing to a weekly chart out here. There's the weekly chart. What's the weekly chart tell me? The weekly chart says to Steve-O that right now its price oscillator is right at zero. I mean, it's basically right at zero. And so it says, I bet you the euro just kind of squiggles around and continues with this consolidation and goes sideways, waits for Stevie's red line to catch up to price before it really provides us with that next decision as to what it wants to do out here. So that's what the weekly time frame chart tells me. If we go one level higher and we take it to the monthly time frame, if we take it to the limit, one more time, this is where it looks basically ugly. Because if we take a look at what has transpired this month and last month, we can see that price has been testing Stevie's red line. And last month there was a close underneath it. And this month, which is June 26th, not that many more days left in the month of June, you've tested and rejected Stevie's red line. And ultimately, what this tells us is the euro wants lower price. And if the euro wants lower price, it should target the lows from January in 2017, right around about the par level, 1.03 out there. That's what the longer-term chart for the euro looks for me. Wait till it gets down there. Then you and I, we can go to we can go to Europe, go to Italy, and just simply have a blast. At least, well, we'd have a blast no matter what. It'll just be a less expensive blast. That's what the euro looks like to me long term. Short term, meaning daily, and then what's going on the intermediate term time frame. So thanks so much for writing, and enjoy your day in Montana. We've got another question here. This coming from Jeff E. Jeff says, can you look at this, please? I tuned in late, so if you already covered it, just let me know, and I'll listen to the archive. Oh, you must have heard it, Jeff. We just talked about West Texas Intermediate, crude. And if you didn't hear it, I'm going to give it to you real quickly. What I think about it is this is traded right into a level where sellers are hanging out right now. This is the chart. It's on your screen. So both you and Chris were thinking along the same lines. Do not buy this. Do not buy this now. If you are long, you can consider taking your profits out here. You can consider it because price is trading right up into the top of that box out there. So maybe today was a nice little gift, but you're trading right into resistance when I take a look at the weekly set of profiles out there. But and since I already covered it, you can go back and rewind the archive. But this is basically the reasons why out here, Jeff. So thanks for writing in, and I hope that helps you out. So no more requests out there, but we're just about to go to the hard break, and that means you too get those cards and letters in, or some pings inside the Tiger's Den. And if I get nothing, I'll just have to travel around and try to find something to take a look at out there. Right now, the Dow up 115, S&P up 14. The key, though, the very key, only one thing, one ping Vasily. In City Slickers, it was just one thing, Curly said. And today's one thing, the spot volatility index. If it closes below minus 10% and you're short, you've got to ask yourself, why? Steve Rhodes with TFNN. Be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Jim writes in, and Jim asks if I could please give him the bearish outlook for the NQs out here. So, you know, that's just so hard to do, Jim. I'm just kidding you. Here's what I would be looking for. Here's what I would be watching. And now, you know, you probably don't have this tool, but let me put it up on the screen. Now, it's a bit of a lagging indicator. So I'm taking a look at the market breadth on a 60-minute time frame for the NASDAQ. So if I'm going to give you the bearish outlook here, it is taking a look at the daily time frame chart. And on the daily time frame chart, you had a market breadth crossover, bearish market breadth crossover on June 22nd out there. And as we speak right now, there are 14 constituents, issues inside the NASDAQ 100 that are trading above the top of the box, where there's 53 that are trading below the bottom of their box. So market breadth-wise, this is bearish, this is negative out here. Now, oftentimes, this is a lagging indicator. Not always, it can be very close. But in this case here, the daily chart is not going to help you out. If the market is going to continue to move higher, and I believe that spot volatility index, that one-day rate of change is going to be the real key for you. The other key I would be looking for here, if you are still short the NQ, is watching the market breadth on a 60-minute time frame, which as we speak, at 143, which doesn't qualify as a 60-minute, but as we speak right now, this is trying to turn, or it has actually turned, slightly bullish. Meaning there are 35 issues trading above the top of the box and 35 below. How can that be slightly bullish? Well, when you start to take a look at what's trading, it's close, okay? It is no cigar. If the market is going to turn to the downside, it's going to do it post-haste. It's going to do it soon. Doesn't mean it has to do it in the next 30 seconds. But it does mean it's going to do it maybe by 2 o'clock. It's 144 out here. If come 144, we get a bullish crossover, it's not what you want to see. You can then go ahead and add this to that, right? Because we're kind of mixing up a nice cake here. If you add this to what you're looking at inside that spot volatility index, So I know you asked, well, what's the bear? The bear side is this turns down. This doesn't cross over on a short-term basis out here because you'd see it happen on the 60-minute. Then it would bleed over into the 4-hour chart. We're not anywhere near that on the 4-hour chart, but it's going to start on a shorter-term basis first out here. So the bearish news would be you have a bearish market breadth on the daily. You have it on the 240, and the 60 is right up. Oops, I'm sorry, I didn't mean to do that. I meant to turn it back to 60, and the 60 is they're kissing cousins right now. 35 above, 35 below, 33 in the center. If it's going to turn, it's going to happen here relatively soon. Since it's an hour market breadth, it's 1:45. There's about 15 minutes to go out there. So in essence, that's what I would be watching. If you get the bullish crossover, the next earliest signal for a short or something that you're going to look at if you're going to hold on to it for dear life is probably that 71.68 level, the bottom of its daily box out here. If you close back above 71.68, you're looking at 72.33. You're looking at being able to get all the way back up to the 72.29-ish type level. So, Jim, those are the levels that I would be watching for inside of the NQ for the rest of the day. So thanks for writing in, and best of luck on that trade out there. We've got a question here from Tamar, and this is a move on GE over the next couple of days, and a question on going long the U.S. banks. So you're giving me 2 days. That's a tall order out here. But Tamar writes in, as always, love the show. I bought slightly out of the money calls midday yesterday and closed the first 30 minutes of the open today for over 200% profit. Hey, kudos to you. Is today's move one day pop on news, or should I get back in and go long on GE for a few days? So let's just take a look at the GE and try to do this one step at a time. So GE's got a nice move out here, a nice gap to the upside. You're trading out at 1386. Let's take, and this is the daily time frame chart, let's go ahead and add some volume metrics to it and see how many shares have. So this is a big move off of the bottom. You've got 153 million shares. This is how you like to come off of a bottom tomorrow. You like to come off of a bottom with explosive volume, wide price spread. Don't let the gap confuse you. The gap is your friend. Tells you there was explosive it tells you it's a wide price bar. Because for those people, if I could just simply connect the dots, which was yesterday's close to where we're at, and just fill that in, you'd see it's one of the widest price bars to the upside that GE has seen since the trading day of October 20th of 2017. So you got volume behind the move. You've got a clear signal of a bottom in GE. And I'm not saying to go rush in. And you're going to say, how can you say a clear signal of a bottom? Well, I can say that because here's how it formed the top with Stevie's favorite Rhodes momentum indicator signal out here. So it did that back on the trading day of July 22nd, 2016. Oh, this is a weekly chart we're looking at, even better. And on a weekly chart, what you had was last week was a hammer candle. Yep, that's a beautiful thing with price moving lower, doing less relative energy. And this week, you've got the move higher. You got a bullish engulfing as we speak. Price above Stevie's red line in both instances. It says you at least head back to the trading week of May 25th. And that high out there is about the 1559 area. So it does look like to me that the move here in GE tomorrow is real. But if you're going to pin me down to 2 days, you'd say, well, why are you looking at a weekly chart out there? I can't pin you can't pin me down to 2 days. Just not really going to happen out there. But here's the deal. You were excited about making 200% profit. There is nothing wrong with that. Maybe just continue that celebration. Then you've got the question here also, are the U.S. banks about to bounce? I'm thinking about getting J.P. Morgan, Bank of America, and Citi today or tomorrow. So what we'd have to do is take a look at each of those charts individually and try to identify any type of pattern. Now, you've got a nice little hammer candle as it looks right now in Bank of America. I don't know what the end of the day candle is going to be, but right now you get a hammer. It's telling you that it is trying to hammer out a low. Last time we saw a hammer inside of Bank of America was when it made a low out here on May 3rd. Now it was doing that with less relative energy. That was a nice pattern that turned into basically price moving back up to this consolidation level or clear resistance. So Bank of America has clear resistance out here tomorrow at the $31-ish level. But does it look like it's trying to form a bottom? That's the signal that the hammer candle is generating right now. That was Bank of America. J.P. Morgan, if we go take a look at it, this is not going to pull up the right symbol. Let's try to put in the correct symbol name. And J.P. Morgan also looks like it is creating. Geez, it looks so similar to the Bank of America chart. Did I have Bank of America up there too? Geez, I did. These things both look exactly the same. How about that? Let's see what Citicorp is doing. Oh, let's see what Citicorp is doing. Is it generating a hammer too? It is. You may be on to something tomorrow. You may be on to something. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So tomorrow I don't know what the end of the day candle looks like in J.P. Morgan, inside of Citibank, inside of the other one that you were looking at, Bank of America. But if they were hammer candles out there, you may be onto something. And I could see where you'd be interested in taking a long position out there. If it doesn't turn out to be a hammer candle today, then maybe you're a bit too early. So what I would do, it's 154. You're still celebrating your 200% profit, I'd say. Just wait towards the end of the day before you go ahead and make a decision there. Jim, back to you with regard to that market breadth. We've got 6 minutes to go on the hourly basis, and you can see that the bears were listening in, and they're saying, hey, there's just no way I'm going to let that 60-minute do a positive crossover. Of course, you've got the 3 o'clock time frame and the 4 o'clock time frame. 32 issues trading above the top of the box, 34 below the bottom of their box on a 60-minute basis out there. The final question coming in from Michael, and Michael wants to take a look at Valero, I believe it is. VLO is the ticker symbol, and Michael's question is, has Valero bottomed? JP Morgan upgraded it when it was 121. It's 110 right now. It was in since 96 bucks and sold around 122. Nice deal. Nice sell. Look, if it's bottomed because it's come down to the bottom of its weekly profile at 108.34. If we look at the daily time frame chart, there's no signal here that Valero has bottomed. Has it come down to support? The answer is yes when we take a look at the weekly profile. Is the daily giving us a signal that that is the case? It's not. It's not from the standpoint of any pattern that we would see only in wave 5 to the downside. Today is an inside bar. So, Michael, I say you made some nice money there. I don't care what JP Morgan did and what they upgraded at 121. It's at 110.96 right now. It may have bottom if you want to use that weekly bottom of the box out there at 108.34. I'd be patient. I'd be patient before you go back into Valero. Folks, thanks so much for being here. Stay tuned. Your favorite polar bear, my favorite polar bear, Coca-Cola's favorite polar bear, David White. He's up next. Terrific Tuesday. Tom O'Brien, 3 to 5. I'll be back with you on wonderful Wednesday. Have a great afternoon. Again, thanks for being here. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.